So
The
where is the internal liquidity? It is this high,
yes, yes,
this
yes,
high. So let's do away with this. This is where we have the internal liquidity we'll be looking forward to.
yes,
Above that internal liquidity, you can see this is the last up close candle. We have the flip zone where the
yes.
return supply.
Supply.
And you can see we have price did not completely fill up this fair value gap. You can see there is a fair value.
Mm,
I'm coming. Let's take it step by step. This is the first fair value gap. You can see that price returned to the mean threshold. What we mean by mean threshold is the midpoint of this
middle.
gap. So you can see price mitigated the mean threshold of that.
Sure,
So
sure.
when you're in a trade or when you're analyzing your charts, and then you see price mitigate the mean threshold of a fair value gap or an order block, and fail to close above it, above that mean threshold, then you should know that there is the high probability, a very high probability that the market will fall. You get.
Okay.
So you can see that
Oh,
price here respected the mean threshold. The volume of
yes,
the block did not close above the mean threshold.
yes.
You get, and then it fell to the downside. Meaning,
Okay.
what this is telling you is that price is facing rejection. Institutions are sponsoring positions here.
Yes,
Get it?
yes,
We had this order
yes,
fall. So, but you know that this movement helped create the inducement because this is it.
yes,
Let's
yes,
move this. Since we retail traders will see this pullback and then price fell, definitely what we want to say is this is a resistance.
yes. So it's going to sell from that.
Price will come and then fall. But what you can see is that there is a sponsorship candle above it, and it left this what fair value gap. You can see. You can
Yes,
also see here how these candles were failing to close above
above.
this other fair value gap. You could see how
Yes.
price was ranging here. Price ranging. Price was struggling to break through. But because of the order block, price just had to return to mitigate it. You,
Yes. Then.
yeah.
Yes.
So you see this rejection and utilize it to just take an entry, or you just be patient to see return
Mm,
to the ideal
to the
order block.
other block.
You,
Yes. Yes.
so
Yes. Yes.
now we can now see that here is where we have the inducement, the internal liquidity.
Mm,
So you can see the
yes.
pullback. Price took out this internal liquidity. Are we together?
Sure.
Yeah.
Yes. Yes.
So meaning we have this as a valid low point. Here's a valid low.
Yes.
Price has
Low point.
tested
Mm.
lower high now. So
I'm following.
you should look out for the sponsorship zone above that.
Inducement now.
You get.
Yes.
So now let's
Yes,
see
please.
if this is at premium. Let's see from the high here
To the low.
the low. You see, it is not also at premium. So that's why
That's the
price
premium.
would not. It is those stuffs are set as rules to just guide. You get. But once you
Okay.
understand what you're looking for, you understand how structure delivers. You can take some certain positions. You get.
Okay. So
See,
if I get it, if I get it right, it's like it's much more or less identification of the point of interest. That's one also really matters because yes, this I can see that there's I don't know if this one is an under block also
which one?
just above the other block above it.
This one.
Yes.
Now let me use that for example.
Me, I'll be focusing on that one because it is in the premium zone.
Okay.
That's where my focus will be.
Okay. Now,
That's usually what I do.
okay. All right. Now, what you need to ask yourself next is this: which the order block really led to the break of the structure? It is this one.
Okay, yes.
So
Okay,
one of the
okay,
criterion of an order block is that it must lead to the break of structure.
okay. Yo, let me write it down. It must lead to the break of structure.
This is the last up close candle that really gave us that bearish movement that took our structure.
Yes, please.
Yeah. If you where is the most recent impulsive move? This is the most recent impulsive move. So if you're asked, where is the most recent impulsive move? This is the most recent impulsive move.
Impulsive. Okay.
It's
Okay.
the up close candle, the bullish candle that sponsored that impulsive move. This is the bullish candle.
That's the
You
yes.
get it?
Yes, please. Okay. Okay.
So now what you can see is price did not return to premium. Why?
Yes.
We have liquidity
Yes.
already here. And then this is the other block that sponsored this break of structure. And the other block is within equilibrium.
Yes.
So you can see price did not really mitigate the other block completely. It fell. It just mitigated the low of the other block and fell. No, there are situations
Yes.
that the market would not return fully into a zone to just mitigate the low. That is why at times you can have miss entries in trades. So now you can see now we've established now the next structure points, right? So
Yes.
here we
Yes.
have now price broke this structure to the downside. Now we'll be looking out to see where is the possible inducements in price, the possible internal range liquidity. We all have all these fair value gaps, which are also internal liquidities. We also have this other one resting here, which is an internal
Yes.
liquidity also.
Liquidity.
Now, yes. So what you can now see is this. Let's remove this. So I said this is not the valid break of structure. This is the candle that validates the break of this low point. This
Yes.
bearish candle. So now we have the fall of price to the downside. So this
Sure.
this low, meaning this, let's take this as a swing low because it swept the low. This is the last candle. And you can see this is a valid pullback because it took out the high,
Yes.
right?
The high. Yes.
Basically, we have, it means we have fall, pullback,
Yes. The import, then correction.
correction, and then
Yes.
fall. Mr. Chris, you can see this is an order block, right? This is an up
Yes.
before a bearish move, right?
The bearish move. Yes.
But it will be unsafe to take a position here. It will be unsafe
Yes.
because this would act as a buy side liquidity.
Liquidity
You get it?
or the inducement.
Yes. So it will be unsafe to want to take a position from this order block.
Yes.
So you can see price return, it was ranging. Institutions were manipulating the market here because they know this will be regarded as an order block. But it is also the next internal liquidity we should possibly look forward to see that the market would raid before continuing the downside.
To the downside.
You get it? So now we have
Yes, please.
full of price, price pullback, price fell. And what we can identify is this is not the candle that led to the break of this low point. So when we are in a bullish market, we are paying attention to discount prices.
Yes, but this we're in a bearish.
Yeah, in a bear
So the premium.
to premium, we want to sell at higher price. Then we buy at
Yes.
discount price.
Lower.
Yes. So now you can see how price was reacting, but then it created a ranging condition. What are you seeing? The market is stacking liquidity. First,
Yes.
it's stacking these relatively equal highs. They're creating these lows. So for you to have a bearish continuation, you should anticipate that the market will want to take out the high first, this relatively equal highs before continuing to the downside.
Going to yes to the downside.
You can see that is what the market did. The market pushed to the upside into premium,
Then it's sold.
fell. It filled up this fair value gap, this one.
Sure.
And slightly it went ahead since within the premium, we also have another fair value gap here.
This small one. Yes.
So you can see how price, since this is within premium, you can see how price went, and it is
Yes.
closing below the main threshold. Let's pay attention to the one within the premium zone. You can see this is the fair value
Yes.
in the premium. So you can see how price
Yes.
is failing to close above the main threshold, neither above the fair value gap. Price fell. So if we are to mark this structure, it means that now we have, this is the created low, This is the high.
Yeah, that's the lower low. No?
Yes, now this is the high.
Yes.
So now we see the fall of price to the downside. Now the market what took out this low point. The market went back up and it high. So
Yes.
you see, the market will do whatsoever the market wants to do.
It wants to do.
Yeah?
Market.
The market
Yes.
whatsoever it wants to do.
It wants to do.
You get so now the question is, why would the market do that self?
To get more liquidity.
Get more liquidity. So you can see that you can mark your structure rightly. You get
Yes.
market will take your liquidity and move.
Yes.
It is not that the structure you identify is wrong. No,
It's wrong.
it's not.
Times.
So the institutions will just want to take out stop losses. They want to take out liquidity before moving the market. So
Okay.
you've
Okay.
identified basically valid structure. This is it. Price should
Sure.
move this. They know that this is a valid high point. For that reason, they only took out the liquidity. Because one,
I remember
you go on.
I learned from somewhere too that if you have a brick of structure like this one,
Yeah.
at least that brick of structure must have a pullback.
Yes.
If that brick of structure don't have a pullback, then it's not valid.
Yes.
That's where I remember some time ago I learned that thing,
Yes.
that knowledge from somewhere.
Okay.
So in such a break of structure, I would know that no, this one is not valid
Yes.
because it has no pullback.
Back. And that is what we can see in this leg. So you can see that is what we have in this particular leg move. And I'm happy you identified yourself because I wanted to ask you now. I want you to show me the inducement, but then you already said it because you can see
There's no.
we do not have a valid pullback.
Yes.
Let's look at it very well. Now you can see that price gave us the fall to the downside, right? If
Yes.
we
Yes.
see a pullback, is for price to take out the high of this candle.
Of that, yes.
But then
Yes.
know what happened. This is
Yes,
an
please.
inside candle within this one. Now price tested
Yes.
this one that went below this. If we want to have a pullback, then this should take this high.
Sure.
So you can see now the institutions are looking for. We need to take a buy side liquidity. We need to take
Yes. Yes.
since we don't have a liquidity within this impulse move. That's why they
Impulse.
and took the liquidity of this high because they know that
Sure.
stop losses are above here, not here.
Yes.
Stop losses are above here, and you can see how they wicked it and then price fell.
Yes.
So indirectly now, this is no longer our high. This is our lower high.
Why our lower high? Because I would see, I'll see this, I'll see this previous high.
One,
Yes, I'll see that one to be like liquidity that must be taken. Therefore, transferring the inducement from this previous inducement to that one.
this one,
Yes, I'll see this line, this horizontal
this
line
one, right?
to be the this one is a previous inducement.
Yes. But now since price took
Uh-huh.
this out, right?
That yes, this one becomes the new inducement.
So that is why I'm now saying
And
that this is our new high now, our new lower high. You get it?
yes, 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 yes. For that one, I get it. It's now new.
You get.
Yes,
So
yes, yes.
meaning this is not the low
It has been transferred to here.
to this one. You get it?
Yes, yes,
So our low now is to this one. So basically, we are saying this is our inducement. Price has taken out the inducement and then fell to the downside. Now we have this break of structure to the downside. So now we need to identify where is liquidity, where is inducement resting. Now
yes,
I showed, I think I did a video to show us something, and I was telling you this that if we are expecting to see everything we see in the textbook as what must happen in the markets, then at times we will be so rigid and then we'll be missing out on some entries. You get it?
yes,
So now, we have this perspective of inducement must come like this, and also push like this and then return and then price continues, right? We want to
Yes, yes,
this also. But there are
yes.
situations where it mustn't always be like that. You can see price movements. Price will do this, for example, possibly do this, and then we can see that the market would come, price will fall, and then push.
Sure.
Now, what you can see here is that the market has already stacked up liquidities here,
Mm,
stacked up liquidities here, and this movement took all those liquidities before pushing. Why?
yes.
Because you
Before pushing up,
this as this should be a support, expecting to see
yes, support
the possible next return should sponsor the push of price to the upside.
to the upside.
See, is the institutions just stacked up liquidity. So this is just an accumulation, and then this is the manipulation.
Yes,
Now, breakout traders will say, wow, we have a breakout here, so it should be bearish. And then before you know, institutions will sponsor it. You get. So this is
yes,
also
yes,
a
please.
form of inducement. Inducement basically is a force price movement that we want to entice the retail traders to take a position.
Okay.
So it must not, all inducement must not be like this, but but for rule purposes, for rule purposes, this is what is encouraged. You get.
Yes,
But when you are analyzing chart, backtesting and seeing for mastery purposes, you can see this. You can consider these are all liquidity. Inducement itself is liquidity.
liquidity. Yes, yes,
So you can
yes.
see now market can take this and then push. That is it. You mustn't wait to see that now that price must return to the downside. Let me pick up this tool. That price must return to the downside first to take this low before you
The
continue.
low before.
No,
Okay,
these are
okay.
already stacked liquidities and the market has taken it out. You get it, sir?
Yes, please.
That is why I said there are textbooks perspective. Yes, theoretically,
Mm,
and see all those things. So it is not for us to cram all those things. It is for us to read, understand them, go to the chart, and then look at how these things are playing. You get it? People, people,
yes, please.
who can, I can teach you something, yes, but then you would follow those rules I'm giving you. But then because of the mastery I've built, I can take some certain positions, and then you'll be wondering why did he take this?
You take those positions. Yes,
You get,
yes.
aha.
I
So,
do see those.
uh
Yes.
so that is why I'm saying yes, those rules are okay, follow them. But when you're back testing the chart and you understand this thing, you are going to just like okay, you play by the rules and at the same time be flexible.
Okay,
Yeah.
okay.
So now we can see that we have this as now our break of structure, right?
Yes,
Now,
yes, please.
basically now this is acting as like let's take this as a support. Sorry, yeah, as a support, right?
Yes,
Now,
yes, yes.
and you can see now here it is acting as resistance.
The resistance.
You can see it.
Yes,
We can also see if you want to identify the inducement, you do not have that your clean textbook inducement. You can see
yes.
you have
It's
that
not seen.
clean textbook inducement.
Yes,
Not yet, but there is liquidity.
yes,
You get it? Now let's show the
yes.
liquidity.
Yeah. What is the liquidity?
Price pushed to the upside. Price fell, right?
Yes.
Fail to break this low so that you can consider this as your inducement, right?
Sure.
Push. This one again still return. Fail to fall further to the downside to take out this low. Are we together?
Sure.
Fail to take out this.
Yes, please.
Now, what you should anticipate is since price is pushing to the upside, definitely you should know that price will take out this high point. Are we together? Now,
Yes.
see what price is doing. Price is building up, building trend line liquidity here.
Mm,
So make you feel the market is bullish. You can see you're having this. I don't know if you're getting it.
sure.
Yeah. So
Yes.
building a trend line, making you feel maybe the market is now bullish. So what you can now identify is you ask yourself now, you have this low was broken to the downside. You get
Yes.
broken to the downside.
Yes.
Where is
Yes.
up close candle? The possible last up close candle that sponsored this break of the slow. It is this candle here. This is the last up
Green.
because the market is
Yes.
bearish. Institutions bought from this candle, took price higher, but then we have the fall.
Yes.
You get. Now,
Yes.
this is your order block, but this does not fulfill those criteria, those rules that
Yes. Yes. Me automatically I'll see it as an inside candle.
are. You get.
Yes.
Doesn't fulfill those rules, those basic rules. It
Yes.
doesn't. But that is the
It doesn't. It doesn't.
and you can also see that it didn't really leave a fair value gap. The fair value gap possibly I think is filled up here. No fair value.
Yes. Or it has been filled. Yes.
So now for safety, you are to not take this position. You get. But for mastery, you can take this position. In this case,
Okay.
what do I need to wait for? I need to wait to see the reaction of price here. Price return mitigated it. Now what do we have? A daily close
Yes.
candle. What is the daily profile? Price close below this low.
Yes.
I've gotten a confirmation. Price close below the bullish low.
Yes.
So then I should know for the next day, I should look forward to start framing a bearish movement to the downside. You get it?
Okay.
Now
Yes.
you can see it took out this high point. It took out this high.
Sure.
So liquidity is not always those inducement mustn't be clean, neat as the textbook. You can see
Okay.
price is giving you this movement here. Movement that is failing to continue further. So you should be looking at the highs for price to take the high before you can frame your bearish movement. It mustn't be clean like this. You have this,
Like the textbook own. No?
then like this, and no. It mustn't be that this must take this. You know, basically, if you want to identify the inducements, you are saying that based on theoretical example, we want to see this fall, right?
Mm,
This pullback should come
yes.
down like this. Then we expect the return and then the fall, right?
Yes. Something like that. Yes.
So that is why I told you, if everything we learn from courses, books, play out every time, everybody should be rich.
Then everybody will be rich. Yes.
You get it? So you have to just be
Yes.
understand the concept of what really is the liquidity. Where's the liquidity? Swing highs are the liquidity.
Okay.
You get it?
Okay.
So you can see
Yes,
price
please.
is forming the swing highs here. Price formed the swing high, fell, but failed to break this. Went higher, took out this, but this failed to push below to break this. So what is the sponsorship above all this liquidity that is being built up? This is the sponsorship
There is it.
you get. But
Yes.
still yet, this does not fulfill your valid order block based on the basic rules.
Yes.
Aha. Based on
Yes,
the basic
please.
rules, this does not fulfill that.
So, but yes.
But based on you've built mastery, you understand what you're looking for, then you can consider that. And for safety,
As
wait to see the delivery of price. Because you know,
okay.
here we have what we have here is let me take this out. What we have here is an engulfing candle.
Yes.
This bearish
It's
engulfing.
an ongoing tender.
Yeah. Let's check the 4 hour. Now, when you establish an order block from a higher time frame that doesn't have fair value gap, so you can look a lower time frame to look for a possible institutional order flow, or you can see fair value gap. You get it? Now,
Okay.
this is what we
Yes.
can see. You know, this is that order block we identify from that daily.
Yes. From the daily. No?
But here you can see here in the 4 hour, you have this buy move before the sell move to the downside. And you can see that price did not mitigate that flow. So you can see this is the order block from the daily time frame, right?
Yes.
And we can see this institutional order flow.
Mm,
Buy movement before this bearish move. I see that.
yes.
The movement against the trend before that trend. That is the order flow.
Yes.